just happened.
Hello, good morning. You're watching Newsline. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. As usual, with me to my left is my colleague Kartik Malhotra. Let's quickly begin with markets, Kartik. Third straight day, markets opening in green.
And what a rally this morning, Shweta. You know, markets are up. Otherwise, we've seen this trend of 0.1%, 0.2%. Markets are up almost 0.5% this morning. And all major indices looking in the green. Very positive start. Let's look at Sensex, Nifty, Nifty Bank, Nifty IT, all up about 0.5% or so. The broader markets, Nifty Bank up almost 0.65%, Nifty IT up about 0.7%. The rally in the small caps and mid caps has been even better. So small caps this morning were up about 1.5% or so. Overall, the mood of the markets is looking good. This is coming despite the fact that overnight we saw crude prices go up, and the major two blocks in the US that produce crude, you've seen the prices per barrel going up to as much as $84 per barrel. Despite that, markets have not taken much of a hit this morning. Overall, I think some positive cues coming. Of course, the deferment of the hearing of the Adani Hindenburg case, has not seen any much action on the Adani stocks. We've seen all the announcements made on Reliance Jio Financials. All of those have augured well for the markets. We've seen both Reliance as well as Jio Financial Services opening in the green this morning. Add to that, there is news coming in from JSW. JSW has, of course, now apparently officially made the bid to acquire the Chennai plant of Ford Motors, which had packed up, shut shop and moved out of the country about 2 years back. So that idle plant is being picked up by JSW. In addition to that, there is news coming from Zomato as well. And after Tiger Global, we saw SoftBank also doing a block sale of about 1.17% that it held in Zomato. So even the Zomato stock in green early this morning.
All right. And so a flurry of news there and a flurry of stocks that we will be tracking. With us at this point in time is Kush Bohra of kushbohra.com. Kush, thanks very much for taking time out. Good to have you back. Markets opening in green, positive cues. In fact, markets all across the world, Hang Seng is up, Dow Jones is up, S&P is up, closed in fact 0.5% up last night. It's a positive start.
Guys, first off, thank you for having me on the show. It's really good to be back. You're right, and let's not forget the fact that the markets were consolidating in a range. Well, they still are. I mean, we're still within that range of 19,250 to 19,550, very close to the 20-day and the 50-day moving average on the Nifty. 50-day moving average on the bank Nifty. So we might be, looking positive. But, if I look at it from a slightly, broad perspective, we're still in the tight range. For me, a happy note will be if we end above 19,500 or, 45,000 on the bank Nifty. That is when, I will say it's a cause for cheer. But we can always, celebrate the green on the screen, that we're seeing right now.
All right. So markets, of course, continue to be range bound. Nifty was up almost 19,400 this morning. So reaching there, Kush, just in time, reaching there. Let's quickly move to stocks that are in action today. And, let's quickly begin with one fact. What my colleague Kartik here pointed out is the JSW stock, and more news coming in by the way of JSW. We know that they are foraying into the EV market. They're looking very actively, partnering with MG Motors, trying to be, in fact, majority stakeholder in the India subsidiary of MG Motors. Now in the latest, they're also acquiring a Ford factory in Chennai. All of that, Kartik, augurs well for JSW, and also I think strengthens their position in the EV market, makes them one of the strongest bidders, in fact, and the latest entrant.
Absolutely. So, I think the automobile batch has been restricted with X number of players, and that market has not really expanded over the last many years. You haven't seen another domestic Indian car manufacturer emerge. With JSW now foraying very clearly into the auto space, now we don't know whether this is going to be an EV only space. It makes sense to have, let's say, an EV stack, lining up for JSW with talks with MG Motors, and MG Motor, of course, has a large variety and depth of EV vehicles out in the market. But that's not all. You're also now looking at the Ford factory being picked up by JSW. One thing is very clear, that JSW wants to be another entrant in this really booming, buzzing Indian car market. We've seen auto numbers, 2 million cars sold in the first half of the calendar year 2023. So JSW, largely known as a steel magnate, a steel conglomerate, we are looking at a case of forward integration this time, not a backward integration. With Tata Motors, it was forward integration because Tata Steel was an up and running profitable business. And Tata Motors integrated with Tata Steel and had costs really, compete with the likes of Maruti. But with JSW, again, we are seeing this forward integration happening, that you are a steel magnate, you are a large company that makes steel being an important component that goes into auto manufacturing. And therein forward integrating your businesses, getting big time into the auto space. And we've seen all the buzz around EV as well. MG Motor is facing stiff headwinds from the Indian government and is unlikely to continue operating as MG Motors without an Indian partner holding some sort of a stake in it, because we don't want a Chinese company to make in China, sell in India. And with JSW now acquiring this steel plant, acquiring this Ford plant in Chennai, or making a bid to acquire that, and partnering on the technology side by picking up stake with MG Motors, we could very well see an MG JSW brand emerging from India and making in India using perhaps the technology that MG Motor has already. But very interesting story here of a non-auto brand and not as diversified a group as, let's say, Tata, getting squarely into the automobile industry.
And what does it really mean for the stock and for the competition, Kush? Tata, in fact, Tata EV, and it's the rebranded entity of Tata.EV, a fresh one at that, where Tata is hoping to roll out more than 10 models in the next 2 to 3 years. That's the timeline they've set for themselves. JSW making its bid for the EV market, more and more players, competition heating up. What does it mean for the segment?
Well, I can for sure say that it means interesting times for. But yeah, see, I think this is the needed push that the stock needs to. Consolidation mode, rule out moves to 660 and even 700 levels in the coming months. So good times ahead. As far as and the JSW news I was listening to, it might take some time for it to translate into numbers and ground reality. And the competition is actually said
more competition heating up. I was right. It means well for us at least.
Oh, absolutely. And it's coming. We're discussing this by less than 24 hours since the launch of Tata.EV, which is their brand new separate EV company that they've sort of hived off from their passenger vehicle mobility. And you look at a group like Tata Group is looking to do 50% of its sales to be electric vehicles by the by time 2030s roll around. So from sort of a company like Tata to just about all the other companies which with their EV foray, even a company like Mahindra and Mahindra, which is traditionally a diesel car maker, now getting full time into the electric vehicle space. Who would have thought? There's a Mahindra Thar EV that is now available in the market, and so is the EV versions of other ones that Mahindra is looking to launch. So from the premier car companies in India to to the likes of MG, which is now willing to sell their EV, their compact EV, which is the Comet, with a buyback plan as well. So there is a lot afoot as far as Indian companies and selling electric vehicles in India is concerned, be it four-wheeler or two-wheeler.
Right, a lot more offerings in the market, a lot more choices for consumers to pick up from. I think all in all, good news there for not just auto players as competition heats up, but essentially for people who are hoping to buy an EV
and what's
very,
interesting
very
is,
soon.
Shweta, that these EVs, especially the two-wheelers, are not just two-wheelers being bought by end consumers. Look at all the quick delivery platforms, quick commerce platforms.
Which is what's driving their sales at this point.
And bringing down costs.
And bringing economics, the profitability on every order is actually now going up.
It's been rallying. After Tiger Global, another investor is in fact letting go, diluting its stake in Zomato. Stake, in fact, it acquired after acquisition of Blinkit. It means well for Zomato.
At least it's reflecting very well in the price of Zomato this morning. Zomato stock was up about 1.5% or so, nearing its 100 rupee mark. And I think in trade today, we should see the stock maybe touch the 100 rupee mark finally. Of course, Zomato, as we know, listed in April or May 2021 and had taken a massive beating immediately after its listing. Now, a lot of its original shareholders, including angel investors as well as venture capitalists, continue to be invested in the stock, and that investment period ended last week. So they could now freely offload their stake in Zomato, and they were legally clear to offload their stake, and that is what we started seeing. It started with Tiger Global, it moved on to SoftBank. And now there are talks that there could be one or two other investors also who hold some sort of blocks in Zomato, finally offloading them in the open market. And that is seeing a positive impact on the stock of Zomato. Remember, Zomato also turned profitable last month, of course, on account of a technical sort of, book accounting, not literally cash flow, as we call it. So there was, of course, a long-term depreciation, asset reallocation, etc., which lent the stock and the profitability of the company to sort of go in the green. But overall, yeah, I think good times for quick commerce, with a startup listing, becoming profitable, stock price moving in the right direction, and investors who were part of the initial journey of a startup like Zomato seeing some value in not holding on to the stock but actually selling it and taking their profits back with them.
What does it really mean for food delivery segment and for apps that are delivering food at this point in time? Not just delivering food, quick commerce too, Kush. I mean, look at Zepto, the first unicorn of this year so far, and valuations are looking good, numbers are looking good. Could you perhaps apprise us on what yours at this point, how do you feel Zomato stock will be moving in near months to come? Is it a buy, is it a sell, and the quick commerce and the commerce delivery apps in general?
So if I jog my memory a little, the last time I was here, we started the discussion with Paytm. And I put Zomato stock on the radar precisely for this reason, that the stock has actually now recovered very well from the lows and now is in a space where you could comfortably look at a trading bet also in this stock. Now, if I look at the last few months move, the stock's actually respected the 20-day moving average for the most part. In fact, as a part of our advisory service, we recommended this stock for targets of 99 and 103 for the near term. The target 1 seems to be hit, on course to hitting target 2. But, as I was listening, if someone's got a positional bet in this, someone's bought it at around, those 130, 140 kind of levels, where we had seen a lot of accumulation happen when the stock started to fall from 170 levels, the listing levels. I think those levels are also in sight now. It might just take some time, but I think, 125 to 130 levels are also in sight. So I would actually suggest a fresh entry also in this stock. Now, as far as the entire space goes, the entire space has actually been doing well. The likes of Paytm, maybe Policy Bazaar also already moved and then, went into a sideways mode. But the two stocks that I have on my radar from this space are Paytm and Zomato. And looks like, it's steadied, the ship steadied, and, good times ahead.
So talk to us about ONDC. Kush, do you see ONDC to be a game changer? Because Zomato has its own tech platform, Zomato has its own logistics arm, but Paytm and Paytm Mall of course ceased to exist, but Paytm, we've seen the food delivery vertical of Paytm is now riding on ONDC. So do you see ONDC, Kush, to be a game changer when it comes to business operations of Zomato, let's say, versus Paytm, which are both your stock picks?
Not really, and I'll give you a very simple reason. When Jio Financial Services was announced, Bajaj Finance took a beating, and how, right? My point of view, my view there was very simple. Also, let me just add one more case in point. Asian Paints, a lot of companies, I think including JSW, they announced their foray into the paint space, and Asian Paints took a knock. Let's not forget, these guys are leaders, and they've stood the test of time. They know how to manage competition, how to manage the market share, all of that. Now, while some competition will probably hit the margins by a little bit here and there, but the way I see it, the way India story is shaping up right now, this will only expand the market. So I don't really see ONDC denting Paytm, Zomato, or any of these businesses by a whole lot. If at all, as I said, it'll probably just expand the market, bring more consumers, bring more clients on the on board. But I don't really see the leader sort of taking such a big knock. And again, like we mentioned about JSW, it'll take time for these ideas to translate into numbers. So I'll wait and watch. I don't see this as a very big dent just yet.
Kush, the last time we spoke about Jio Financial Services, since you mentioned that in the example with Bajaj Finance, last time when we spoke, neither you nor I, nobody practically apart from I think the Ambani family and some of the investors, knew about what the game plan for JFS looks like. Now there is far more clarity. There is an NBFC division, there is an AMC division, there is an insurance division.
And that Jio brings more confusion.
And Jio continues to be a telecom service. So different regulations, different regulators, different businesses within this larger Jio conglomerate, not just a Jio brand. So now, how do you see, Kush, how do you see JFS? Because it has very well broken out of its initial estimated price band of 160 to 190, and this morning has even breached the 230 mark, which was slated to be, a good high point for the JFS stock. So now with so much clarity and a little more confusion, and add to that, the lower circuit cycle broken to a point that now we're talking about upper circuits.
Yesterday.
So 231 this morning in opening trade. What is it telling us?
So when you did mention we now have clarity, and I was just going to mention, do we? I don't, at least. I know there is still some time before this will again translate into action, results, numbers. See, we know why the stock has actually rebounded and hit two upper circuits yesterday and today. It's promoter buying, it's the family group buying. Of course, this does show that there is a lot of confidence that the promoter group has in the share. But I'm not sure if the entire ETF selling is over just yet. There are still some hangovers that the stock has even around the business, and also in terms of the ETF selling. So for me, while this does make sense from a long-term perspective, if I'm looking at position sizing or capital allocation, I will go ahead and pick it, but I won't allocate too big of a part of my portfolio to this one just yet. I would rather bet on the listed entities, or rather the ones that have been listed for a while now. I will make an allocation to it, but not too big. So that's my that's the strategy that I will have when I park some money in Jio Financial. I haven't done any yet.
So technically, how are investors looking at it? I understand, I think the surge in prices today has happened on account of a block deal, which we assume could be the promoter family or could be, some other partnership that Reliance has or Jio has cracked with investors who've picked up a block deal in Jio. But how are investors looking at it? Technically speaking, is it a fundamental pick only because we know it comes from the Reliance table? Had it been any other brand, had it been any other company demerging into something as ambiguous and details of which came so much later after the news of the demerger broke, do you think markets would have reacted differently? I'm sure they would have reacted differently, but is it primarily right now just a fundamental pick and people want to invest in it because they were anyway invested in Reliance, and that has only been broken up into
Kush,
JFS?
One more question if I can add to it. Is there any Indian company that actually ends up being reporting to 3 different regulators?
4 actually. If you
4
look at
different
Jio,
regulators.
TRAI.
I'm really not sure on that one. Actually, I'll probably have to dig up something like that. That's probably a trivia for me to go home and work on. But no, you're actually right. Let me put it this way. It's not even a fundamental pick yet, as it is a reputation and a brand bet. You're right. Had it been any other, had it been from any other stable, from any other name, I am not sure it would have commanded the same kind of, interest also, let alone, the kind of buying that we're seeing right now. So for me, this is definitely banking on the brand, the reputation of the, Ambani family, Mukesh Ambani, in particular. We've seen the kind of wealth creation, that has happened, under his, umbrella of stocks. So for sure, there is that backing. Even from a fundamental perspective, look, if I do a fundamental analysis also on this one, I need some numbers, right? And they don't seem to stack up just yet. So I will wait on this, and I will just fall back on my trading style and my trading strategy rather than any kind of analysis just yet.
Wow. All right. So no analysis, ambiguity prevails. We don't know whether there's going to be any clarification coming up anytime soon.
Know the name.
What was hoping to be or what was anticipated to be a clarification did not really clarify much, did it? But we'll of course have to wait and watch out. But let's move on to a story we're tracking since yesterday, and a big announcement. In fact, Kush, stay with us. We'll come back to you. It really relates directly to India's energy sector, also to the big election gambit that perhaps the government has started to make. That is by the way of the LPG cylinder. A reduction in prices of at least 200 rupees. Good for the common man. I mean, come to think of it, without the math, which I'm sure Kartik will bring into the picture very, very soon, without the math of it, I think it augurs well for the common man.
Oh, it absolutely does. And you put it into perspective. Timing matters a lot. We're looking at 5 state elections to be held before the year 2023 rounds out. And of course, the big Lok Sabha elections scheduled in May, probably in May 2024. So sort of leading up to less than a year to go for the big central election. So clearly, everybody will be looking at the timing of it all. But the fundamental fact of the matter is this: it's been a 200 rupee LPG cylinder price cut for the regular people. 33 crore beneficiaries in this country of LPG cylinders. They will get their cylinders now at less than 200 rupees, which basically means that if you're in Delhi, Bombay, Kolkata, Chennai, and if you are buying LPG cylinders, it is now below the 1,000 rupee per cylinder mark. All of them are on the 900 odd rupee mark. That's where things are.
8 to 900.
So that's where it'll settle out for everybody concerned. But as far as the PMUY, the Pradhan Mantri Ujjwala Yojana scheme is concerned, the beneficiaries, the beneficiaries of the PMUY are the extremely poor households in this country. There are about 10 crore beneficiaries so far inducted under the PMUY scheme. They will get an additional 200 rupees subsidy for every cylinder, which means that they in total will get a 400 rupee per cylinder price cut with this latest move. And that's absolutely imperative at this time of rising prices of everything. You're seeing food inflation hit the roof. So which means that from the thing that you use to cook the food to the food itself, prices of everything is going up. So any reduction, this kind of reduction, 400 rupee reduction on the cooking of it all, it's going to augur well for the common man for sure. But yes, the timing, everybody will look at the timing and go, this is great to do it during this time of the year. It affects so many people. You're talking about India's energy sector. This will provide energy for any kind of election campaigning going forward as well. Because you can't take away from the direct benefit of it all. You can keep talking about the timing, but the benefit of it all is so important. But before we talk about the benefit, we'll have to understand what happened before this. There was a price hike in July 2023 of 50 rupees per LPG cylinder. There were 2 price hikes in the month of May this year as well. So after 3 price hikes come this price cut, essentially, so to speak. And so my question here is that, going forward, how will it all pan out? We'll start knowing the results from the state elections onwards. Okay. And of course, we'll finally, tally the impact of this when the central election results come out.
I quite like the fact that we're not dilly-dallying around it. we are clear. We know what this is. Even if it augurs well for the common man, we know the timing of it. Timing is a great suspect here. But where does the money come from, Kartik?
I lost my wallet. I think who stole it? It's not with me. I think the government has actually broken into our banks pretty bad. Okay, to be honest, see, the middle class, of course, and our dear friend Amit is working on this lovely story on how the middle class is actually being killed by 1,000 taxes. And that story should release on our sister platform News 9 Plus later today. So to all our viewers, there a little bit
watching
of a plug.
this broadcast, make sure
that's definitely a story that you must watch, because we assume you are the middle class and you are the affected party. But
we're doing this for you people, actually. So.
But yeah, so for the middle class, who pays the taxes, and so many of them
without choice,
6.7 crore Indians paid taxes this year, right? So for all of them who paid the taxes, great. The government has made a fiscal decision to cut down on fuel prices or LPG prices at a time when food inflation or vegetable inflation is soaring. So you cannot control that, but you can put a little more money in the pockets of the end consumers. For the middle class, great.
Okay.
For the below poverty line, who already had the Ujjwala Yojana, who already had the subsidy, another 200 rupees discount for them, and the middle class again expected to take that on its chin smilingly like we are doing right now. I mean, that is obviously an election discount, and that is what I would like to call it. It's an election discount valid for what, about 9 months or so?
But for all your cynicism, I'm sure you use cooking gas.
Yeah, but I have the piped gas pipeline coming in.
So it doesn't help.
Which in any case I think is a great infrastructure development that has happened in this country, where you're not actually going and collecting cylinders or getting somebody to deliver those 14-15 kg cylinders to your houses every time, and then they're dirty, they're ugly, they're rusted, and all of that notwithstanding, they're expensive. So you have the piped gas line coming into your kitchens, which of course is much cheaper and I believe much cleaner to produce as well, and doesn't pollute at all. Neither does the LPG, but the process of production of LPG is a polluting process. But what I'm really trying to drive home is the fact that this is an election discount. This is valid at least for as long as inflation ebbs out, or as long as food inflation, vegetable inflation, which again hits the middle class and the below poverty line in equal measure, ebbs out. And until then, this is a pure play freebie, yet another ravery, yet another freebie, call it whatever you like, which is direct beneficiary transfers, this time not in the way of money going into your account, but you spending lesser money from your account. So it is definitely that, and I think it's interesting to see how the oil companies, the PSUs, are actually taking an impact of this.
Let's get Kush into the conversation and perhaps help us understand, Kush, how are PSUs reacting to this news?
But for sure, today we are seeing a dip, but this is right now more of a sentimental dip, because from what I have come to understand is that the subsidy is out of the the government tax, and not really out of the OMC's coffers. Now the reason these stocks are down, and perhaps the sentiment will turn negative on them going forward, is because, as you've rightly put it, this is like an election discount, and running up to election, less than 200 days from now, there are more such discounts in store, and that is when the OMCs could actually start taking a knock. But also, let's not forget, we've been buying some cheap oil from Russia, and the coffers right now seem to be pretty full for the OMCs as well. So while it may be a bit of a knock, I don't think the profitability will be affected by a whole lot. But for sure, this just translates into one thing, that OMCs are a no trade right now, at least not a long trade. So I will have my eyes set on the other sectors. OMCs are a no trade for me, running up to the elections.
Why is it that BPCL, HPCL are in the red, but the rest of them, GAIL, ONGC, etc., are in the green? What is driving that? ONGC, of course, we also know, I think, is making a 2 trillion rupee investment expansion,
for net zero emissions.
For net zero emissions by 2070, I think is the target.
2038,
2038, okay, yes. 2038. But BPCL, HPCL, both in the red this morning. Why are the sentiments different? You mentioned this is sentimental trade happening, Kush, but mixed sentiments there?
Yeah, absolutely. I mean, see, this could perhaps also be, a technical play, and I also see this as, a derivative and a derivative expiry play also. If you see, some of these stocks are trading very close to their levels, where you've got some call and put positions, at very strong, very strong call and put basis. Now, leading up to the expiry, there will also, for sure be an expiry impact as well. In fact, the movement that we are seeing on the indices also, Nifty, Bank Nifty both, has also to do a lot with the kind of setups that we've seen on the expiry side contracts. So that is perhaps something that's playing out. So yeah, as I said, the overall sentiment will turn a little bearish on these. and I wouldn't really foray into these stocks for at least next few months.
Right. Kush, I just have one thing to ask you before I let go of you. Do you use LPG cylinders or pipe gas in your house?
But that is if you want to answer that.
Oh no, absolutely. I migrated to the pipe gas for a while now.
Okay, cool, fair enough.
All right, all right, Kush. Thanks very much for taking time out this morning. We hope to get you back, in fact, very, very soon. Thank you so much for joining us with your inputs. Staying on with the story around consumption, around government hoping to, kick in consumption, hoping to ensure that people have more money in their hands, more discretionary spending. All of it's got to do with the fact that the inflation has been a big bummer for the government. It's been a big bummer for a lot of us, in fact. Vegetable prices all-time high, pulses all-time high. With September around the corner, there is a lot of buzz, Krishna, on how consumption will pan out. Mixed cues coming in so far. Some say that inflation will go down. However, if you look at the weather pattern, and we discussed this, in fact, you were on the show yesterday when we discussed impact of El Nino, perhaps a monsoon which hasn't been very, very favorable to a lot of people in south of India, in west of India. All of that could be a big dampener. How is September going to pan out? It's going to be a crucial month for the government.
Wait, though it is expected to be drier than previous months, but what we have to think of when you think of September in India specifically, we don't know anything for sure, but traditionally September is the time consumption usually picks up or even peaks in India, because we're smack in the middle of the festive season. So you've had your Ganesh Chaturthi is already starting the process of festivals in the country.
Okay.
So September is when everything from cars to electronics to clothes to food, all kinds of consumption takes place, traditionally speaking. But the only thing that we have to bear in mind with El Nino affecting us is the kind of crop that we will get eventually by the end of this particular monsoon. Yes, there have been vagaries in monsoon which have affected output, and which is probably which has literally led us to where we are in terms of food inflation. The only hope here is that consumption picks up despite, irrespective how how the crop is, how farmers are sort of dealing with the vagaries of the monsoon. If the average Indian consumer decides to go in for huge consumption, I think that will turn the tables around, so to speak, in September. But the only question is that if there's going to be that much consumption, what's going to happen to inflation all over again? So much money chasing so many goods, which means that you're going to look at inflation continuing to stay at those high levels as well. But as you're rightly pointing out, these are mixed cues for India going in to the festive season, when Indians are looking to consume a lot, but at the same time prices are high, and also that being driven by a monsoon that is really confusing India by giving it too much in one parts of India and totally taking it away from other parts of India.
Absolutely. I mean, come to think of it, the variety of monsoon that we are seeing in north versus south, Kartik, 38% lower in the south of India, way higher than what most of us expected in north of India, especially bad for Himachal, Uttarakhand. It's such a mixed sort of month, and what's going to lead up to a September, much awaited. Whether inflation will go down or not is going to be tightly watched by a lot of agencies.
So, Shweta, I think, when RBI Governor Shaktikanta Das spoke at the Monetary Policy Committee meeting last, he had very clearly mentioned that there is going to be a accommodative stand which the RBI is going to take, and there is going to be a very, very clear focus on hammering inflation down to the 4% levels. But this is, of course, a supply generated inflation. It is not a demand generated issue. So the idea is that whatever the RBI may want to do, or in the West, let's say whatever the Fed Reserve may want to do, all you can do through tightening of monetary policy is control demand.
Okay.
And it's tight enough already. I think any further tightening than this is actually going to snap out. So the idea really needs to be right now that, okay, how do we look at consumption? There are two broad buckets of consumption. There is an essential consumption, which is your food, your vegetables, your pulses, your rice, your grain, etc. And then there is your discretionary spending, right?
Yes.
So consumption on essentials will continue to happen irrespective of the prices.
Absolutely.
You may not buy tomatoes. Well, now you may, apparently the prices have come down, but you may not actually buy basmati rice, you may buy ordinary rice, you might not buy organic atta, you might buy regular atta, but the point
you will
is
buy atta.
Essentials will be bought. So that consumption story is going to continue. Now what happens is, in a high inflationary scenario, you cut down on your discretionary spendings. So the middle class, the urban elite middle class, so to speak, and those higher above that are likely to, in any case, use up their savings in the festive season to buy aspirational products which they've been waiting to buy for a while. And this is where the discounts come in. This is where the freebies come in. So other reports suggest that automobile companies are going to have the largest ever stockpile inventory of unsold vehicles, and not on account of unsold vehicles because there isn't demand, but because they expect that the demand is going to be so high that they are better off stocking up their warehouses, increasing production right now as we speak. So there is going to be a greater inventory than we've ever seen before in automobiles. There are going to be festive discounts. So that discretionary spending, irrespective of inflation, is likely to pick up in the month of September and continue perhaps till end of December. So obviously that quarter of October, November, December should see a much higher contribution through way of consumer spending than the previous 2 quarters of this year, including the one that we are in right now. But overall, yeah, essentials will continue to be consumed unabated, and discretionary spending should kick off in
I think it's a
September.
fair point when Krishna says what happens to inflation, so much money chasing so much goods. It's going to be counterintuitive. On one hand, you want consumption to pick up, on the other hand, inflation remains a major problem in the economy. And sticking to discretionary spending, you talked about auto, you talked about inventories in auto, and government is also ensuring that there are supply side incentives. So the PLI for auto and the auto companies is likely to be extended by 1 more year, Kartik.
You know, the beauty of that always is that no matter how much you discount through PLI schemes, through any other incentivization for manufacturing services, SEZs, tech parks, whatever you may call it, you know, the challenge always is that whenever there is a scheme, a subsidy offered by the government to an industry, that subsidy is not coming out of money that RBI is printing afresh. That subsidy is always coming by way of us, the middle class, paying taxes. So, you know, I like to keep coming back to the whole tax story, because that is where the fiscal deficit or the fiscal prudence or the fiscal stimulus really comes from. So there are taxes. Now the point is, you invest or incentivize investments in, let's say, a sector like auto, where of course the trigger is that this PLI scheme, which was to be valid for 5 years, is now actually valid for 6 years because it hasn't picked up in the last financial year, and the government has given that 1 year extension to the PLI scheme. Krishna has all the details, he'll tell us. But the point really being that these investments being made by the government to incentivize more production seldom translates to cars getting any cheaper, smartphones getting any cheaper, any other SEZ, tech park, whatever you may call it, any of these incentives, tax holidays, a 1:1 investment made by the government, cheaper access to land, cheaper access to labor markets, however you incentivize it, all this money that the government invests by virtue of these PLI schemes goes from the coffers of the exchequer, which are filled month on month, year on year by the taxpayers, right? Corporate taxpayers as well as, you know, direct taxpayers, like individuals like us, and of course the GST collection, indirect taxes, all of that. But the point is that these investments are great for the GDP. They are great for employment generation. They are great for overall capex investments, which is what they are targeted towards. Reduces the burden on the government to keep building highways and keep building roadways and keep building airports, because you need to have the momentum of investments in the economy going for the GDP to grow. But the point is, they seldom translate to cars getting any cheaper for the consumer.
Items getting any cheaper, but a 26,000 crore PLI for another year for auto companies, does that mean there'll be more takers?
The way Kartik explained it, it's more, to put it really simply, the timing has been extended by a year, simply because so far around 10,750 crore rupees is what has actually been invested under the PLI scheme. So what they're essentially doing is giving themselves more time, because the allocation of, to be exact, 25,938 crore rupees. That's the total allocation for the PLI auto scheme. There are different PLI schemes that we have in this country, from electronics manufacturing to auto manufacturing. PLI auto, which is for the auto sector, the total outlay is 25,938 crore rupees, which is nearly 26,000 crore rupees. To make sure that that entire money is invested or given out to companies for auto production, it's essentially the government giving themselves another year to make sure that the entire money gets disbursed to the companies. And bear in mind, this in a sense from my understanding, is an outcome of some serious lobbying by the auto sector with the powers that be with the Indian government. Because not only have they managed to get this 1-year extension, the government has also promised quarterly disbursement of those subsidies, which wasn't the case before, which would help in cash flow management hugely for all these companies. So there is going to be quarterly disbursement of subsidies, and also under this scheme, you get the subsidy only when you have at least 50% of domestic value addition to what you're making, or DVA. So, and there are a couple of agencies which test and tell a company whether they have met that criteria or not. Exactly 2 so far. But after this lobbying, which I call as lobbying, what has now happened is that number of testing agencies goes up from 2 to 4. They're doubling the number of testing agencies. They're giving out subsidies every quarter. And they're essentially making sure that the idea with which they set out to do this, which on the 1st of April 2022 is when the scheme began, during the last financial year, they finish it. Now, all this means is that it's relief, joy and boost for the auto sector. For another year. It sort of reminds me of the scheme that was given to IT sector once upon a time, when they kept extending it by a year, saying that, oh, take it.
Since we talked about lobbying, and Tesla has been trying to lobby, and hopefully Tesla has been trying to get that PLI scheme. Under the new extension, will Tesla be made eligible if it comes into India?
If it manufactures in India. I think the rule
with
is very clear.
50% localization, if it's able to meet that norm.
Absolutely. So I think like what happened with the FAME subsidy, you know, the whole challenge always is around localization. Why hasn't, okay, let's look at PLI in its entirety. 1.97 lakh crores, I think, was the total outlay on PLI. About 26,000 crores allocated for the auto sector. That is, give or take, what, about 1/8 of the total outlay on through PLI dedicated to the auto sector. Now, the auto sector, of course, has not seen much incentive in taking on that PLI in the last 1 year, and what you said, just about 10,000 crore rupees or something has actually been picked up by the auto sector. Of course, there is advantage for the auto sector to invest in creation of ancillary industries through MSMEs who can localize whatever the auto companies are procuring from outside India right now. But they don't find it in their interest right now, it seems, given the numbers, that they've been able to make any headway in that localization, and hence they've been looking at the PLI scheme with some sort of suspicion that I don't want to take that subsidy and then 3 years later realize that the MSMEs that I contracted work to have not been able to give me quality. I am losing customers, my prices are going up because I stopped importing, and now I import at a higher price because my order value has come down with those importers, and hence I am beginning to lose, and because I lose, I reduce the localization, and then the government comes after me, hey, I paid you subsidy, give it back to me. Right. So it's a catch-22. So PLI or any scheme, when you make it, I think, that's the challenge. I think since we are talking about localization, I have a big problem when we talk about even brands like, let's say, Decathlon, Miniso. These are brands, I'm taking these names, fully conscious that these are brands that came into India through an FDI route, and they started selling in India. Excellent pricing, excellent quality. And honestly, look what has happened 3 years or so into the business when they started localizing. Look at the difference between the Make in India tag products and those which are not made in India. I mean, Decathlon t-shirts, you put them for 2 cycles of wash and those t-shirts are gone forever. I use them to clean my cars, obviously. So, there's a problem with any scheme that you roll out. It has to be sustainable for the long run. It is not something that will only look at a vested interest that I want manufacturing to take off, I want MSMEs to mushroom, I want manufacturing to happen, ignoring the quality that Indian consumers who are paying money to buy those products deserve. So the focus has to be as much on quality as on, of course, the jingoism around making in India and creating jobs.
And especially if you want to continue exporting. And there the quality checks are going to be much far greater than the ones you're going to be selling within India.
And since we're talking about exports, let's stick to exports. Let's stick to the export-import story that's also playing up. Government is hopeful, and there are also reports that the current account deficit would be narrowed to about 1% of the GDP. All of that on the back of the fact that imports are down, but exports are also down. Although government says exports will pick up, we're very hopeful. But good news is, at least for current account deficit and people who are keeping an eye.
Correct. So two stories. I'll quickly sort of, in the interest of time, sum them up both clearly. Of course, the CAD, current account deficit, or India's trade deficit with the rest of the world narrowing is good news, technically speaking, because it shows that you're not importing in a far higher quantity than what you're exporting. So that deficit is now narrowing to about 10 billion US dollars, right? Which is give or take about 1% of the GDP. Now, we've been used to seeing these numbers on current account deficit being 3%, 3.4%, 3.5%. That was an average. So the current account deficit narrowing in absolute terms is good news to 1% of the GDP, $10 billion. Look at it sequentially, it was actually 0.2% of the GDP in the last quarter of the last financial year. So sequentially, it's an increase, but look at it on a year-to-year basis. Q1 of last financial year, $18 billion, and that has now come down to about $10 billion. This is as per ratings agency India Ratings.
Okay.
Now, coming to the other fact about exports, those exports are going to be, of course, there's a different story playing out on exports, simply because, again, Commerce Minister, Industry Minister Piyush Goyal has gone on record and said that India's exports are likely to rise in the next few quarters. Again, I question on what basis is he sort of, making these statements, because data is not really emerging when it comes to merchandise exports.
Right.
We have an export surplus when it comes to services. But when you talk about merchandise exports, those numbers are not really adding up. So I think very simply put, it's good to be hopeful, it's good to be bullish, but there has to be far more action on ground for the exports to take off.
Whether it will narrow to 1% in the first quarter, numbers of course will come out, in fact, in next 2 to 3 days.
That's right. 31st August, I think overall macro numbers should come out.
31st
and
of
that's
August.
where we'll see where we are.
That is where we are going to have a clearer picture of what's going to happen. But finally, before we end this bulletin, let's talk about a story that I think all of us will be happy to hear. We know now, Amit, that Google Meets is coming up with a new DuetAI, which is going to be extremely helpful if you are one of those people who don't like to attend meetings, perhaps not like to take notes at all. This feature will help you do that.
Yeah, so it is going to have auto-generated summaries of your meetings, of your presentations, of your pitches. It is going to be there invisible during your pitches and meetings. It is going to have imagery enabled special effects and lighting effects without you asking for them.
Okay.
So that is big. The scary part is it has the ability to make changes on your documents without you knowing about it. It's good in some ways, but think about the ramifications.
The ramifications are going to be huge.
That's one part of all the announcements, but yeah, that's the part, understandable part.
So an assistant, a chatbot, an AI attending your meetings, not just attending your meetings, also taking down notes for your meeting and action items. What is really your KRA? What are you expected to follow up on? All of that sort of
I wish this
making corrections.
I wish if this had come out maybe about 2 years ago, it would have been helpful for a lot of people working from home.
Yeah, absolutely. Binge on all the OTT content while there's a chatbot attending your meetings.
Google got caught off guard by the slew of measures that Microsoft came up with after their acquisition of OpenAI and their deal with Meta. So they had to come up with something big.
All right, and this is as big as it gets. It's a new AI tool, a chatbot, or whatever you like to call it, called DuetAI from Google Meet, where you can use this AI tool to perhaps, take notes for you, attend meetings for you, and do whatnot. All eyes, of course, will be on that mega announcement by Google. We'll try and get you more details perhaps later on. But with that, it's a wrap on this bulletin. Thanks very much for watching.
इंजीनियरिंग कर रहे हैं क्योंकि सभी लोग कर रहे हैं
Coaching is now starting from grade